I'm J Rod, but the star of the show, Zach Scheit, my main man down in Atlanta, Georgia. How are you?
Well, I'm doing good, but J-Rod, I do have to say I'm physically a little bit warm right now. So it's
Just a
it's
little bit.
June in Atlanta, Georgia. Yeah, we're starting to get the heat rolling in, and of course, we'll be at 90 degrees and 90% humidity very soon. So it's getting hot. And just this weekend, my HVAC unit went out.
Oh
So
man,
I had to
perfect
turn off the
timing.
fans in my office so that you could hear me. But normally we've got the low hum of fans just trying to stay cool here.
Right.
And of course, it's no fun for the family either. So I had a service technician come out, and he was very nice. Came out, took a look at everything, and showed me, exactly what was going on. As it turns out, we blew a capacitor, we blew a compressor, and I don't even know if this has anything to do with the Back to the Future flux capacitor or not. But the point is, we've got to replace some things in the unit. And the problem is that it's going to take some time for these parts to arrive. And that just fits right in with exactly what we're seeing in the market right now. We've got these supply chain shortages, and they're causing problems for business, and they're causing problems for you and I in just our day-to-day lives. That's why I'm sitting here sweating and trying to stay cool in the Atlanta heat.
We've literally
Um,
got you in the hot seat for this month's call.
exactly. We need to put that on a banner somewhere. Zach in the hot seat.
Yeah.
But yeah, so the thing is, with my family, with the kids running in and out all the time, I would be willing to pay more if I could get my hands on a capacitor, flux capacitor, whatever it is that we need, the compressor. If we could get that right now. And the service technician that I'm working with is doing the best that he can. So I'm not, raising my price or anything. But that's how inflation works. When you need something and there aren't enough of those things available, you're willing to look around and you're willing to pay more to get it. If I were that HVAC business, I would be looking to get my hands on every single capacitor, every single compressor that I could, and I would pay a premium amount just to get those things in my door so that I'd have them available for customers. And all of those people that are looking to buy these things are pushing the prices of those things higher. J-Rod, I'll tell you, I actually I had some time with my coach I guess it was a week and a half ago, and he runs a sprinkler company that they basically do sprinklers for restaurants and other businesses, the fire safety sprinklers. And he was telling his associate, we need to go ahead and put in an order for, I don't know what he said, 100,000 sprinkler heads. The same kind of deal. He said he wants to be the company that then can offer those sprinkler heads to all of his competitors if they need them and mark them up, price them higher. So those are the kind of things that we see happen in an inflationary environment that we have right now, because the supply chain issues are just challenging. That's just one of the many things that are driving prices of things higher. So that's something that we have to think about very carefully, not just with our investments, but also with our day-to-day lives. We're all paying more for the things that we buy right now, but it hits some people harder than others. So for instance, the people who are earning less, just the line workers at different places who maybe have lower skilled jobs and are getting paid less, per year, inflation really hurts them a lot harder. Because they're the ones that can least afford to pay higher prices for gasoline to get to and from work, to heat or cool their homes, and those kind of things. And the other group of people that are really hurt by high inflation are those who are elderly and are on a fixed income. So if you're retired, you've already done your savings, you've set aside enough to retire on, and now prices for everything that you pay are moving higher. That is a big challenge. And it's really, really difficult. So we're actually seeing inflation as a tax of sorts on some of the people who can least afford to pay this extra tax. And it's something that I want to make sure that I'm helping you guys on this call to understand, A, what's going on, and then B, how we can invest and how you can take some really proactive steps to help offset the higher costs of inflation. We are starting to see some signs of inflation peaking, and that's encouraging. And that's partly why we're starting to see the market have a little bit more life in it right now. But I want to make sure that we don't get too Pollyanna-ish about this whole idea. J-Rod, back when transitory was the word that everybody kept talking about, we've got transitory inflation. You and I talked a lot about how that still doesn't make it better. Just because inflation is here for a short amount of time, inflation is prices rising, moving higher. And if inflation goes from 8% to 4%, that's better, right? But it doesn't help you get things better to where they were before. It just means that they're getting bad at a slower rate. So you can think about high inflation is like taking the elevator up a skyscraper. You know, you're going from floor 2 to 6 to 8 to 10 as fast as you can. And then if we get low inflation, it means that we jump off that elevator and now we're taking an escalator. So maybe we're not moving higher quite as quickly as we were before, but we're already on the 40th floor and we're still moving towards the 42nd and the 44th floor. So prices are higher, they're continuing to move higher. Inflation may be peaking, but it's not coming back down. And that's why it's still so important for us to be proactive in protecting your wealth and protecting your spending power against inflation. Now, looking at the market, we've actually got some pretty good opportunities to do that, to really invest in a way that grows your wealth, that grows your income, so that you have more capital available to spend for the higher prices. And actually, if you beat inflation, then you can buy even more. Your wealth goes even farther, despite the fact of inflation coming through. One of the things that I'm seeing that's really encouraging right now is that the price to earnings ratios are coming back in. Now, what does that mean? That's just a technical term of saying you're getting a lot more for your money when you make an investment. Now, we have to think carefully about what you're buying whenever you buy a share of stock. Think about this, you're investing in a business. So it's not like we're buying the Zoom company that makes great videos and we really like that. And so we're going to buy the stock and it doesn't really matter what we're paying because it's a good company, it's going to do well. No, those days are over. What we're doing now as an investor is we are buying a business. When you buy a business, you say, okay, so how much does this business earn? How much debt does this business have? How much will this business grow over the next year or 2 years or 3 years? What does that business pay its owners? And as far as dividends, those are all of the things that we need to think about when we make an investment right now. And one of the biggest ways of looking at those important details is to look at the price to earnings ratio. How much are we paying the price for the stock versus how much are we receiving the earnings from the company? And right now, the price that you pay for earnings is much less than what it was a year ago, 2 years ago, and even throughout a long period of history. It's been a long time since we've been able to buy good quality stocks at discount prices, and we're finally getting back to that place right now. Now, what that means is, as we look forward over the next 2 years, 5 years, 10 years, when you buy stocks that are cheap compared to earnings, it means that your future returns are likely to be much higher. On the flip side of that, when you buy stocks that are expensive, it means that over the long period of time, your returns will likely be less because you pay too much for those stocks. So I'm encouraged because I'm seeing that we're getting a lot better deals on the individual stocks that we buy. But at the same time, I think that you've got to be very careful where you buy. So the biggest names, the mega cap techs, the Microsofts, the Apples, and some of those, even though we like some of those names, Amazon, for instance, some of those names are way too expensive. And so those are not the ones that you want to look at. You want to look at some of the smaller companies and some of the more valuable companies. And you can do that simply by looking at the price earnings ratio. And that's available on a lot of free websites that are financial websites like Google Finance or Yahoo Finance or finviz.com. That's one that we've talked about here before. You can look at all of the details for your individual stocks that you're interested in. We've all got to be selective investors now. We can't, gone are the days of just buying an S&P fund or just hoping that the overall market moves higher. We've got to be very careful about where we invest. But if you are careful about where you invest, I think you can do quite well, even in this inflationary environment. So I can't stress enough the importance of shifting out of your speculative stocks, the Zooms, the Pelotons, the company, the cloud computing stocks. Those companies are exciting. The technology is exciting. The stocks are still expensive. The stocks are still vulnerable. The stocks are still very risky. We want to move our capital into good, solid companies that make things or sell services that people want. and companies that generate real profits, and bonus points if you can buy a stock that pays a great dividend so that you get that cash flow in the door quarter after quarter after quarter. That's how you win in a turbulent inflationary environment. And it's also how you're able to sleep at night without stressing about whether or not you're going to be able to make your investments last, whether your retirement is going to last, whether you need to get another job to offset higher inflation. By being able to focus on the stocks that are paying you well, that helps you enjoy life. And you know, that's what we're really all about here. I want to make sure that I help you build and protect your wealth so that you don't have to focus on it, so that you can focus on the things that really matter in life, your family, your friends, the people and the causes that mean the most to you. We can still focus on those throughout this season. Even though it's challenging, I'm excited about your opportunities in this market right now. So J-Rod, that's what I've got for this week. Would love to hear your thoughts.
Well, yeah, I think, fortunately got dropped out of the call here for a power issue. I'm just going to assume that's inflation related too.
Probably it actually, yeah, or it could be a natural gas or something. Who knows?
It could be, but I think you covered a lot of really good ground. A lot of the questions that keep coming up about inflation and about where to park money. I know these are regular questions. For the last 3 years, we've been talking about this stuff, but yeah, that's about all the time we have for today's call. Zach, any final thoughts before we
just that professional attitude. So the people who retire best have that professional attitude towards stocks. So if you can almost put yourself in the seat of a Wall Street manager when you make decisions with your retirement, instead of in the seat of like, I'm in my backyard thinking about what's fun and exciting, but all right, let's take it a little bit of time. Think about this very logically, very professionally, make a decision, do the right thing, and then enjoy the rest of your life. I think you'll wind up in a much better place financially by being proactive like that.
Love it. Well, thank you so much, as always, Zach, for your insights as a former money manager. Great stuff. Well, on behalf of Zach Scheit, I'm Jay Ron, and we'll see you next month.
See you guys. Thanks for being on the call.